terms of high probability for me. And as I want to remind you, when we are looking at the markets and the way I'm teaching you as my student, and or if you're a casual viewer, if you're just listening for the first time, I try to teach a concept that I dubbed smart money. And that means trading when it's smart to do so. Not, well, I got time to be in front of the charts. I have time to be here, and therefore the market should submit to my will and or my system. And sometimes, as we have seen, it simply doesn't want to do that. Now, what makes this market right now low probability? Well, I'll give you a couple things. I tweeted this morning rather early asking what the criteria was, list the criteria that would constitute a high probability trade setup. Number one, you have to have some measure of understanding where that weekly candle is going to expand to. And I don't have that. I haven't had it for, well, going over 2 weeks now. And I've admitted it, and I've been upfront and told you, I don't have a real good read on what it wants to do in the context of high probability. Now, can I get in there and take 2 handles here, 2 handles there, 3 handles here, 2 handles there? Yes. But it's nerve-wracking for me. And it would be very difficult for you to follow that. And it would be really just a waste of time. I want to teach, as I've been teaching, if we're going to look for a setup, it needs to have some kind of higher time frame draw on liquidity. Why do I believe you, as the analyst, where do you believe the market's going to draw to on a higher time frame? And if we can't ascertain that with a one-sidedness, where it's so hard to argue the other side of the marketplace, then we don't have high probability. So why would you want to go in? Why would I sit out on Twitter? Why would I go on live stream when I admittedly said that I don't have a good read on it right now? So what did I teach and preach? If the market's not giving you something, go do something else. Now, as a young man in 20s, this would drive me nuts, and I'd be in there trying to hammer and try to do more and do more and do more, and I would hurt myself, much like some of you probably have done. I've read one of the tweets from, I believe his name on Twitter is ICT student. He tweeted to me saying he lost $40,000. Listen, you have to stop. You have to know when to stop. And I've given rules to know when there's high probability, when there's low probability. And again, I've stated this. I've been away because of that very reason. So pushing the envelope, trying to do more when it's not likely to do so, whether you're in a funded account or not, just it doesn't make any sense. So $40,000 is something that obviously hurts. It pinches, I know. But look at it this way. You bought a car you shouldn't have. Now you're stuck with the payments. There you go. That's the way I looked at it. That might not fit for you. It might not be equivalent, but that's how I looked at it. When I hurt myself and blew account, that was very hard for me because I didn't come from money. So you have to do, number one, the rule in this is preserve capital. And you have to have an understanding of when you're likely to hurt yourself by forcing something that isn't there. Forcing something in the charts, like a Rorschach, it's that ink blot phenomenon. Put an ink blot in front of 2 people, they're going to see not the same thing. They're going to see something totally different. And when the markets are in low probability conditions, and this is the part where you write these things down, folks. When low probability conditions exist, everybody's system is going to talk. Everybody's harmonic, everybody's Elliott wave, somebody in Gann is going to have some excuse as to why it's going to go up. Supply and demand, ICT order blocks, it's going to be breakers, it's going to be this. They're all going to have something that they want to see in price, because that's the perfect excuse for them to push the button, because they have no patience to wait for the market to come out of this low probability condition, which I've outlined for you. I told you this is what I want to see. It needs to come out of that range. And if I'm not mistaken, I believe I put it on Twitter. I think it was a short little video on Twitter. If it isn't, I know it's on my YouTube channel. One or the other. It was something I talked about audibly. And I showed the chart and said, this is what we're looking for. It needs to come out of that range. Until it does, we're in a very small intraday scalping scenario. So it's a scalper's market, but it's such a small little range if we're forced to do a scalp, going back to that criteria that would makes a trade high probability. Number one, I don't have, maybe you have had, but I don't have a clear indication of where that weekly candle is going to expand up to or down to, because it could do either one. And because it can do either one, I have to wait. I'm not out here trying to show you I'm a jack of all trades in every single market condition every single day. I'm teaching you how to follow a model. I'm teaching you also how to look for high probability. And when it indicates to me that the market's simply not trying to do what I would require of it for the model I'm teaching you and the models that I teach my other students, I have to sit still. And there's nothing wrong with that. That's not weakness. That's an advantage, because there are people out there that I'm quite certain, one of my students admitted it on Twitter to me, and you can see it. He tweeted right directly to me, said he lost $40,000 this month. And I'm not trying to make light of it or make fun of it, but that's the reality of this. If you don't know what you're doing and you can't control yourself, become impulsive and you push, try pushing a boulder up a mountain. That's the equivalent of what you're trying to do right now. Take a step back. You might be seeing people out there getting lucky. I promise you, folks, if they continue to do this kind of stuff, the market will shred them. Anybody can get lucky. And I got lucky for months when I first started. And then the inevitable came. So don't look at, well, I might get lucky during this because I don't have the time, the benefit of time, because the sands of time in my hourglass are ticking down because I have to do a funded account challenge. I have to get to funded status. I have to do this. I have to do that. But those grains of sand, you ever watch an hourglass empty out? When it first starts, it's like, man, this thing's going to take forever. And then as it gets halfway down, you're like, oh, well, I got to go back and wait that same amount of time for the remaining half of sand to drain down to the bottom of the hourglass. It seems like it goes forever. And then you get down to that last tiny little 1/5 or 1/8 of the volume of sand, and it seems to go real, real fast, kind of like old age. When you're young, you feel like you got a lot of time, but you want to rush, 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 rush. Me at 50 years old, getting ready to turn 51, I look at it now as I don't have a lot more time on the other end, and I want to go real, real, real slow. I want things to slow down. That's what you want to do in your trading. I didn't see that as a young man. I wanted fast and furious, turbocharged, always, full steam ahead, and it couldn't get there fast enough for me. Now, because I've hurt myself over the years, I've learned that lesson painfully. And one of my students has just now paid $40,000 for that lesson. You don't need to do that to learn it. Sitting still is a skill set, because capital preservation is the number one rule in speculation. Because if you can't follow that rule, it doesn't matter how good your system is. It doesn't matter how good your mentor is. It doesn't matter how many competitions you won, how many trophies you got, how many people like your posts, how many people follow you on YouTube. It does not matter. All of that will not help you if you cannot control and keep your money. You have to have that rule set. And by me teaching and preaching and doing it, when I have nothing to act on, I have to sit still. In truest form, paid students of mine would fade my analysis and then complain how it didn't work for them. My analysis would work, theirs didn't. They're saying the concepts don't work. That's a personality flaw. Pushing in this environment, pyramiding in this environment, stupid. Stupid, stupid, stupid. Don't do that. You're not in a low resistance liquidity run condition. You're not in a market that wants to get somewhere real quick. Think about this for a second, folks. All of these things that are going on around the world, we have war, several wars on the horizon. We have multiple bank collapses and closures, and more on the horizon. Central bank digital currencies are looming. All of you got good credit, you want to buy a house, congratulations, and you have to pay more for someone that doesn't have it. Does that make sense to you? Like, we are in the upside down right now, and you're all trying to put blinders on, ignoring that everything is getting tore up with chaos. So the markets are sitting still. They're not they're not in a climate where big money is in there trying to do anything. Because if they were, it would be moving around. It will not stay like this long. Now, 2 weeks may be a lifetime for some of you. I understand. I was there too when I was a young man. I was thinking to myself, man, this is going to go on for years. No, it doesn't. The market, I think it was Paul Tudor Jones in Reminiscence of a Stock Operator. Um, Something to the effect that the markets can stay irrational longer than you can stay solvent. And if I butchered that, I apologize, but it's pretty much close to what I believe that book referred to, meaning that the market can behave in a manner that does not allow you to profit or participate with an opportunity that would result in a gainful outcome. It can do things irrationally, stay in a range that just simply doesn't permit you to do what you want to do on a typical basis of trading a certain model, looking for this thing to happen, looking for that to happen. It can do that longer than you can endure it and stay solvent, meaning keeping your account. You blow your accounts faster than the market can leave that state of irrational behavior. And that's all we're in right now. Now, there's going to be people out there say, but look at this ICT, look at this. I did this, I did that. You're supposed to be the world-class leader in trading, blah, 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 blah. Listen, man, I looked like a superstar when I first started. And I had no skill. It was all luck. Luck, luck, luck. People get lucky all the time. They win the lottery. But you keep pushing this environment, trying to demand things from it that it's not likely to deliver to you. It's going to bite you. And then when it does, impulses are going to come. And you're going to trade when nobody's looking, and you're going to blow your funded accounts. And you might get those free resets, but you still know you did damage. Try to avoid that. Don't push so hard. Nothing says you had to trade the last 2 weeks. Who says that? You did. But you don't understand. I understand more than you realize. These markets aren't going anywhere. Prices is stagnant right now. Look at the daily chart. You have wicks and tails, both end up and down in that range. I saw a tweet, but I thought 100 handles or so is enough. Well, if you're looking at a range that is likely to leave and go somewhere, that's plenty of range. But there's nothing indicating to me, and I don't know what it's doing right now as I'm talking to you. So I don't know what price is at this moment. It could be behaving in a manner that, is doing something wonderful right now. I don't know. I'm staring at water. So you don't have high probability right now. And if you made money, I'm going to be honest and tell you my opinion. That was coincidence. It's coincidence because nothing in the market right now is behaving in a manner that constitutes high probability. Back to that list, the criteria that lists, or you should be listing, having had a list from all the teachings and lectures I've given, you got to know where the weekly chart's going to expand. Because if you don't have that higher time frame sponsorship behind the move, because large flows and delivery in price is going to be seen in an expansion on that weekly chart. It's going to be reaching for some measure of value, either fair value or to reprice to inefficiency, one or the other. So, hang on, there's a guy going by here with a golf cart. Morning, bro. You look too happy. Oh no, he's going to come over and talk to me. Hold on. Okay, he's going the other way. I thought he's going to come over and say, "Hey, how you doing?" I'm like, "I'm broadcasting. How are you?" the, the joys of doing things live. But the list and criteria for high probability is we must have an understanding of where that weekly chart's going to expand. And if you don't have that, let him get out of here. Hold on. If you don't have that, you are immediately you're in a low probability condition. Now, can you take trades in low probability? Yes. Are you more prone to be incorrect and lose? Yes. When you win, you won't look at it that way. You'll look at it as, well, I have skill. I outperformed my model. That was the excuse I gave myself when I was coming up. Well, I'm better than that model. And I've had models humble me that I've created where I tried to outperform them, and I've learned my lesson with that. So rules are there for a reason. You don't cross the center line when you're driving. If you do that, you're likely to do what? What my son did, cause an accident. That was the first rule I told him before I bought his car. I said, do not cross that center line ever. Don't ever do it. If you do that, 80% of the accidents won't happen. Don't speed, don't drive impaired. He doesn't drink, and don't cross that center line. And you're pretty much, in the hands of the Lord or the performance of the other people driving around you. And you can't control those things. So right away, without weekly expansion or an understanding where it's going to reach for, you are without high probability. Now, assuming that you could, we don't have that. I don't have that right now at present for ES. I don't know where it wants to draw. So I have submitted myself to the rules. I said, okay, well, I can't do anything. Because I can sit out here and tell you what I think it might do based on parts of the model. But those parts are not in alignment with what the model calls for. So I can't sit down with you with a can of green paint and a brand new paintbrush and a brand new canvas and try to paint something in the shade of red or blue or yellow. I don't have the tools to do that. So the model is incomplete. The ingredients for it, the recipe that would call for blue ribbon results, I don't have all the ingredients. So it would be foolish for me to sit out here and try to call something that I know is unlikely. I've done enough. I did 2 days of it where I expected certain things, and as soon as it didn't do it, I knew right away. The experience taught I have to stop. Not because I'm afraid, not because I don't know how to do it, because the market's not giving me what my model is looking for or what I would look for with my model. How is that hard to understand? And why would you view that as a weakness? Because it's not. I know when not to do something. Do you? Do the people that you listen to know when to stop? If they're new, they don't. They're discovering that. And unfortunately, they may be learning that through painful lessons that they may not be sharing with you. They may be doing it in the quiet, in the privacy of their own trading, where you don't see them showing you their results. You don't see them live streaming. You don't see them showing you what they did before their live stream started or after and later on. Whatever results they had when they first started live stream may have evaporated. We've seen many instances of that this year. So you have to have preserve capital at all costs is rule number one. That weekly expansion, you have to know where is that weekly candle. The one that you're in right now for this trading week or before the week begins, you have to have an expectation, a reasonable expectation. You can't just, well, I got a gut feeling it's going to go here. It's going to go. No, it has to make perfect sense technically by the way I teach institutional oral flow and where it's likely to go to. Where has it been? What stops has it just recently taken? Who is in control right now in profit? How can they be harmed? Those are the questions you need to ask yourself when you're looking at price. Because we don't have that weekly expansion where it can draw to a very specific level in a weekly chart on that weekly candle, then we are immediately in low probability. So now that means we're in a scalper's market because also I mentioned that daily range. It needs to leave that. Not just poke its head above it. It's got to leave it. Then sentiment will shift. And that's all I care. I don't have my heart set on the ES going higher or going lower. I don't care. But I will submit to you that we are going into a seasonal tendency for May going into the middle of June, where it, not all the time, most time, it drops and goes lower into that mid-June time period. So I'm kind of like tipping my hand to you. I believe it's likely to go lower if we're going to only factor in seasonal tendencies. So if I'm going to forecast for you and share my opinion going forward for the next couple months, I believe that ES will be lower if it follows its seasonal tendency. Something can happen, obviously, that can upset that entire thing. And what we've seen in the last 3 years, they're saying UFOs and aliens exist. So anything can happen, folks. Anything can happen. It's Looney Tune land, and you have to be careful. You have to be very, very careful. And I think that's what's being measured in what price is doing right now. Like there's so many things that are going on, not just in America, but in other countries. And risk is elevated, very, very high. And big money, deep pockets are not in a hurry to assume new risk right now. And that's just investing